Hello, Michael Gordon here with E3 Realty and Loans, bringing you this week's market update. First, I want to talk about interest rates and my outlook on the housing market. Now, interest rates are at an all-time low. We're literally looking at the lowest 30-year fixed rates ever. So if you're thinking about refinancing or purchasing, now is the time to look into your finance options and lock something in as soon as you can. Okay, now the housing market. A lot of people are concerned because they're wondering, wait a minute, I'm hearing a lot of things in the news right now that are reminiscent of the crash of 2008. I'm hearing about recession. I'm hearing about high unemployment, businesses that are unable to continue staying in business or keeping their doors open because there's no revenue coming in because they have to shelter in place right now. So a lot of things are reminiscent of the crash of 2008. So people are worried about what's going to happen to their home values. Now, we don't know how far reaching this is going to be. And I'm not even going to pretend to know exactly what's going to happen with the pandemic, the outcome of the pandemic, the economy, how hard are we going to crash, what's going to go on. We don't know for sure. Now, what I do want to tell you about is how different this housing market is versus the 2008 housing market, and why the 2008 housing market was destined for failure, and why this housing market is built on an incredible foundation, unlike 2008. Okay, first, leading up to 2008, there was a lot of things that led to the disaster and the downturn. First and foremost, people were buying homes left and right, and prices were going up. Eventually, the prices of homes went up so high that they were getting to be unaffordable, meaning the price of home was higher than what people could afford in the given area. So lenders started trying to figure out ways to continue making loans, continue doing business, and continue allowing people to buy homes. Well, if somebody needed a loan to buy a home, they started making these stated income loans or no income verification loans, which meant, let's say for an example, somebody makes $7,000 a month, which is a really good income. Okay. But the house that they wanted to buy, you really would need to make $10,000 a month to afford it. Okay. The stated income loan allowed somebody that made $7,000 a month to literally just write on the application, I make $10,000 a month. And the bank believed them, and the bank gave them a loan. And you think, well, how does that even work? Well, part of those loan products also had a minimum payment or a payment option, pay option arm. Okay. That minimum payment on that loan could be as little as $1,000 or $1,100 a month. Okay. And they saw that, people saw that as an opportunity. Well, wait a minute. I can just say that my income is higher, and I can get this nice low payment of $1,100 a month, and I can buy the house that I really want. Who wouldn't want that deal? So they signed for it left and right. And those loans were given out by the hundreds of thousands, if not millions. So many of those loans were done leading up to the downturn. It was mind-boggling. Anyways, so if somebody's allowed to take on a loan because the minimum payment was attractive and they were able to buy now that house that they couldn't really afford, well, here's where things started to get real. All right. So if you're on a minimum payment of $1,100 a month, and the interest cost of that loan was actually, say, $4,000 a month, well, what's happening with that other $2,900 a month of interest? It's getting added to the loan balance. So people are making these $1,100 a month payments on a loan, and $2,900 a month, close to $36,000 a year is being added to their loan balance. Okay. So then their loan balance is going up. And even though home prices might be going up for a short period of time, eventually what happened is these loans hit a ceiling where the lender would not let the loan balance go up any higher. It was already predetermined in the terms of the loans that nobody was reading and understanding. So if the loan balance went up, and eventually the lender said, okay, no more, I'm not going to let this loan balance go up anymore, and the payment changed from $1,100 a month to now $3,000, $4,000, $5,000 a month, and that person who is still making $7,000 a month is now facing a $4,000 or $5,000 a month mortgage. It's not affordable. It's not something they could continue for even 1 month, let alone for the months and years to come. So what were they left with? Well, if their loan balance went up and their home value went up, but they were still at that same level of, let's say you bought something for say 700,000 and now you owe 770,000 on it, and you go to sell it and it's only worth 770,000, kind of stuck in a pickle. You can't afford the payment. You can't sell it if you wanted to. So literally, people were having to walk away from their homes left and right. And that's when things got real, because people were like, hey, I can't afford my payment. What else am I supposed to do? So they would walk away and let it go to foreclosure. Well, the bank, loaned 700,000. And if it goes to foreclosure, homes sell for a lot cheaper at the courthouse steps. And, if banks are only getting $300,000, $400,000, $500,000 return on a $700,000 investment, no wonder they were crying that they needed bailouts. They were just hemorrhaging money. Homeowners were just literally having to walk away from their homes. We all remember that went through it. It was absolutely devastating. And there were so many unscrupulous practices that led up to the 2008 disaster that was destined to fail from the beginning. Now, a lot of people got hurt by that. And the government stepped in and created the Consumer Finance Protection Bureau and implemented all kinds of laws and regulations that lenders have to go by now, which I welcomed. I was very happy that we had a lot of these things go into place that were literally forcing lenders to do the right thing, literally forcing lenders. So market crashes, everybody loses. It was terrible. Now it's time to recover. The government steps in and says, well, going forward, you better be able to qualify for a loan. And by the way, banks, if you make loans to people that they can't really afford and they can't prove their ability to repay, you're going to be on the hook for the money. We're not going to bail you out this time. So, fantastic rules to implement, because now it's keeping everybody honest. So since then, people have to prove their ability to repay a loan. Okay. And you have to have some sort of down payment in most cases. Now, there are down payment assistance programs. There is still 100% financing available for first-time buyers only right now. But if you're not a first-time home buyer, you need to have some sort of skin in the game, some sort of down payment. Yes, it could be as little as 3 or 5%, but a lot of people are putting 3, 5, 10, 15%, 20% down on their purchases these days to start with. And they're in loans that the balances cannot go up. The balances can only go down. So as you make your mortgage payments, the balance goes down. And if you're lucky enough to be in an area where your home prices are going up, like we've been realizing here in the Bay Area, well, you're making your payments and the loan balance is going down. People are purchasing homes left and right, and the supply is low and the demand is high, so prices are going up. Well, what that does is that starts to create equity, okay? The difference between what you owe and what you could sell your home for is known as equity. So if you bought your home for $400,000 and today it's worth $500,000, yes, it's gone up $100,000 in value. Well, if you started off with a loan, let's say $350,000, and your home is now worth $500,000, you have $150,000 of equity in your home. Okay. And here's where I'm going with this. In the crash of 2008, the masses of homeowners were leveraged to the hilt, meaning they owed close to or at the value of their home. So there was no equity. They owed $600,000 on their $600,000 house. Okay. Well, nowadays, the masses have equity in their homes, tens of thousands to hundreds of thousands of dollars of equity. Okay. So if somebody faces a financial hardship now, they're more likely to fight to keep their home. They're more likely to stay in their home. They're more likely to have some sort of options that they can work through in order to keep their home. Or if they did have to sell it, Like if there was just no other option and they had to sell their home, at least they could walk away with a pile of cash this time and be able to hunker down and use that to weather the storm, to get through this. So the housing market today, with people having more equity than the crash of before, and sound lending practices that have led to this, and people actually have to qualify for what they've borrowed up to this point, we're just built on a much stronger foundation, which is why I'm much more optimistic about what's going to happen with home prices in the near future. Um, I'm also optimistic that we will get through this pandemic. And again, thank you everybody that is actually staying home, staying safe, and trying to flatten the curve. It's extremely important. The sooner we get out of this, the sooner we can recover from this. It's not too late. So stay positive. Keep encouraging each other, and we'll get through this. Okay, so. I don't want you to worry too much about housing prices, and yes, people are going to face hardships. In fact, let me talk about that a little bit here. If you can't pay your mortgage, okay, the government has stepped in and said, hey, lenders, help borrowers out. If they're being affected by the coronavirus, help them out. Give them 90 days of no payments and don't hurt their credit while you're at it. In fact, give them up to 12 months of some sort of relief, a forbearance, a loan modification, something to help them and don't hurt their credit. Okay. Well, a lot of lenders are handling these in different ways. All right. The term forbearance has to do with, okay, I am going to take what I owe today and I'm going to tack it on later. I'm going to repay it later. Okay. And while that sounds well-intended and it sounds good, and it sounds good that the government has told the lenders to not report late payments on the credit so that people can stay credit worthy, there's other things at play, and we're hearing all kinds of different feedback from how different mortgage servicers, the people that you're making your payments to, on how they're handling these hardship cases. So number one thing I want you to understand, if you are in trouble, first thing to do is call your lender and ask them what your options are. Okay. Find out what they're willing to do and then get it in writing. And before you agree to it, read those terms and conditions. And if you don't understand them, call somebody like us, talk to a real estate attorney, really understand the language and really understand what's happening here. Because while it sounds good in theory, it comes with consequences that most people don't even realize. Some lenders are taking the phone call and saying, no problem. You're affected by coronavirus. You need 90 days of no payments. No problem. We're going to hit the pause button and we're going to go ahead and start collecting payments in 3 months from now, just like nothing happened. That's the best case scenario. And a few lenders I've heard of are actually treating it that way. So thank you. The rest are handling it very similar to what we saw during the downturn before, meaning, yes, they're willing to do a forbearance and they're making it a lot easier to shove it through. But the feedback that we're getting from these different servicers are, give you an example, no problem. We'll go ahead and give you 90 days of no payments or 3 months no payments. And on the 4th month, we need you to catch up all 4 payments. Now, I'm sorry. If somebody can't afford the payment this month, how on earth in 4 months from now are they going to have 4 months worth of payments? I mean, unless they win the lottery or they found that pot of gold, I'm sorry, the money's not going to be there. And so then what happens? Is that when the trouble finally happens and that's when the bank starts foreclosing? I mean, it's just a recipe for disaster at that point if that's how it's handled. Some lenders will take the 3 months worth of payments and spread the repayment over a long period of time. Maybe it's $300 a month extra once you are back to work. $300 a month extra until you make up the difference for that. Well, if your mortgage payment is $3,000 a month and you skip 3 payments, that's $9,000 to make up. Well, if you have to make up $9,000, a lot of lenders are not going to wait more than a few months to maybe a year or two before they want the rest of that money back. And there's other things at play, okay? The taxes and insurance. If you're in a mortgage that has taxes and insurance included in your monthly payment right now, and you skip 3 payments, Well, now you're going to be 3 months behind on the amount of savings that needs to be built up to pay your taxes and insurance on time. Well, if you don't pay your taxes and insurance on time, the lender's going to do it for you, and then they're going to collect from you. Well, it just perpetuates that snowball of debt that's really hard to climb out from under. And so, my advice is this: if you can afford to make your payment right now, make your payment. That is the best course of action to keep your overhead as low as possible. If you just want to skip payments and take advantage of this uh, assistance, it's not what it's cracked up to be. It's more than likely going to burn you in one way or more. So I would really encourage you, if you don't need the help, continue making your payments. If you are in a situation where you need the help, absolutely call the lender, find out the terms. If you need help understanding those, we are happy to review the documentation and help you understand what the terms are. And then there's also one other caveat to it. Even though a lender might not mark your payments late on your mortgage, on your credit report, there is the possibility that they could put something in the comment section of your credit report, like loan modification or modification of loan terms, or even the term forbearance. Okay. Whenever we see that in a credit profile, even though the credit scoring system might not be affected, meaning your credit score might not be hurt, as somebody who arranges loans for a living, that's the first thing I'm looking at on the credit report. What's in the comments? And if there's something in there that talks about forbearance or loan modification or modification of loan terms, it's an instant stop. Okay, now this loan that we thought you were qualified for might now have in the guidelines or the rules a rule that says if the loan has been modified within the last X amount of years or within the last 12, 24 months or 48 months, there's an automatic wait period imposed on when you're going to be eligible for financing again. So even though they didn't mark you late on your credit, they put the comment on your credit, and now I have to stop and tell you, I'm sorry, you don't qualify for the loan right now. You're going to have to wait a year, 2 years, 3 years before you can get financing again. And you may have wanted to take advantage of doing another purchase because, Lord willing, we get through this pandemic and people get back to working and spending money again, and you're back to work and spending money again, and you want to go buy another home, or you want to refinance the home that you're in to save money and take advantage of the low interest rates right now. And now you can't because you did the forbearance, because you did the loan modification. So be careful to just jump on it. Don't do it just to do it. If you need to do it, by all means, you've got to do what you've got to do to take care of your financial household. And we're happy to help you through those struggles as well. So please call us for advice. We'll definitely help you. Okay. Now, there's other things that have been happening in the real estate world. Recently, real estate was added to the list of essential businesses. Okay. Being added to the list of essential businesses does not mean that it's business as usual. It doesn't mean that we just get to go out and do things the way that we did before. Okay. I see those things that are happening and I've seen these posts. Oh yeah, we're back in business. That's not really how it's supposed to be. We got the privilege of continuing to facilitate things that are essential, meaning they have to happen. So for instance, if somebody was already contractually obligated to sell their home or contractually obligated to buy a home, we needed to be able to legally facilitate getting that done and getting it done in the safest way possible. Okay. Now, we adhere to strict guidelines. And with the shelter in place order that most of us are under right now, it requires certain protocols to be followed in order to even facilitate getting things done. It's not just to do it. Okay. It's only for essential needs or things that have to happen right now. Okay. Refinance opportunities are still available and are still happening left and right. In fact, we're able to still facilitate those fairly easily and remotely and virtually like this, where we don't have to meet person to person. We can definitely help you with that stuff. And being that we're in the low interest rate environment we're in, we're doing a lot of that right now. We're helping a lot of people save $200, $300, $500 a month In fact, one of them I just locked in yesterday. They're saving $658 a month off of their mortgage payment. So look for that. I mean, that's helping some people get through the hardship of maybe one spouse is now on limited income or no income, and saving 400 or 500 bucks a month on the mortgage is now giving them the ability to continue affording their home and get through these tough times right now. Okay. Um, Home buyers, what are you going to do right now? Okay. What's the best course of action? We've got people wanting to buy homes right now, and some people are not wanting to have their homes on the market. Some people are wanting to have their homes on the market. And so my advice to home buyers is, first, get pre-approved and get ready to purchase, because there's going to be more inventory coming when we get through this pandemic. I'm staying positive. I don't know what the future holds, but I tell you what, I'm staying positive that if people continue staying away from each other, and we do our part, eventually we'll get through this. And when we do, be ready for more houses to be on the market. Even though there might not be as many right now, but they're still coming on, be ready for a lot more to hit the market when the pandemic is over and we're able to safely move about the county. Lender guidelines are changing. With everything happening, lenders are tightening guidelines right now. They're making it more strict for people to be qualified for financing. So you want to constantly be checking in with your lender, preferably with us. But if you're working with somebody else, just make sure that you're checking in with your lender regularly, especially before you make an offer on a home, because certain guidelines or certain rules that the lender say you have to fit in order to qualify for that loan can change. And if that rule changes and you no longer qualify for the loan and unknowingly make an offer on a home, and your offer is lucky enough to be accepted, I mean, that's going to really suck if you find out, oh man, I shouldn't have made the offer to begin with, because now I'm not able to get the same loan that I thought I was going to get. Okay. So a little ounce of prevention, a little advice is to keep checking in with your lender. And before you make an offer on a property, make sure that you still qualify, because these rules are literally changing daily. So stay in contact with your loan officer. If you need to sell, all right. Notice I said need, not want. Okay. If you want to sell, I would, caution from putting your house on the market right now, because 50% of the buyer pool is just not out there. They're adhering to the shelter in place order. They're staying home. They're not out looking at properties. The other 50% that's out there right now, yes, they're desperate for housing. That's why they're out there putting their lives in danger to still continue looking at homes. But if it's really not a have-to situation, meaning if you need to sell your home, if it's a have-to situation, there's ways that we can help you. Okay. And have to means you're already contractually obligated. You have to sell your home because you are already in contract to purchase another home, and they're not willing to give you more time to sell your home after the pandemic is over. Well, you might have to make a tough choice of selling your home at that point, or you're facing a financial hardship where you have to sell. Maybe you're one of those people that, you don't have the income right now to afford your mortgage payment. You're sitting on tens of thousands or hundreds of thousands of dollars of equity, and the best choice for you right now is to sell because you can't afford to keep your home. Again, even with that particular situation, if there's ways to work it out where you don't have to be putting yourself, your home, your family at risk by allowing others to come into your home. I mean, if you can hold off, and especially with, the forbearance options and things like that, because if you can't financially hold on to your home and you absolutely have to sell, well, maybe that is a situation where you hold off on putting it on the market and take advantage of the assistance with delaying the mortgage payments temporarily. And then when the pandemic is over, I got to itch my nose. When the pandemic is over, go ahead and put your home on the market then, when the full buyer pool is there. I mean, yes, right now still supply is less than demand. That's forcing prices up still, meaning there's less supply than there are buyers out there. Well, when the pandemic is over, there's going to be even more buyers in the marketplace wanting to purchase homes. I do have a feeling that we're going to see a lot more homes hitting the market at that time as well. So it might be a flash of inventory, but it's going to get snatched up fairly quick. And we are still in California extremely short on inventory. That means there's way less houses than we have buyers. Yes, way less houses than we have buyers. Had that correct. And so ultimately, that demand is going to swoop up any inventory that comes on the market during the pandemic and post-pandemic. I mean, we're watching it happen. There's multiple offers on every home that's for sale right now that happens to be priced right and that shows well. Okay. So buyers, get ready. Buyers, if you can wait, please do. Stay safe, stay at home. Sellers, if you have to sell, there are ways that we can facilitate that and do it as safely as possible to try to keep you and your family as safe as possible and continue flattening the curve. Now, the CARES Act that was signed into law on March 27th is also very helpful right now. That's the Coronavirus Aid, Relief, and Economic Securities Act. Now, or Security Act. Loans for small businesses are one of the things that everybody was really excited about. And I tell you what, I'm already hearing that there is a flood of applications happening, and small business loan banks, credit unions, lenders are already maxed out with applications. In fact, more applications than there's going to be money available for. So if you haven't applied yet, apply. Still try to get in line and see if you can work it out, but just keep your expectations low and please read the fine print. In fact, included in this announcement email is a bunch of links to information on these loans that are available. Read the fine print. Yes, they are forgivable, but with certain conditions that all have to line up for it to be forgiven. So it might not be 100% forgivable. So just like I said earlier with don't skip a mortgage payment unless you absolutely have to. If you don't need to take a loan that you're going to probably have to pay back a portion of, if not all of it, don't borrow money. If you can survive without the loan, don't just get the loan because you're banking on it being free. Okay? There's fine print and restrictions in there that you have to adhere to. So make sure you read and understand that before you take the loan out so that you don't end up in a bad situation later and regret borrowing that money. Expanded unemployment benefits. So the CARES Act also has expanded the unemployment benefits in a lot of different ways. And again, in this email, there's some links to exploring what that means. And in fact, self-employed people and independent contractors are included in that now. There's tons of articles and tons of great information on this. And there's a lot of people that really need that help right now that this is hopefully going to be there for. And I know the application channels are all bogged down right now. Increased access to money in your retirement account and 401k, IRA. There's a few different things that are available right now. Like that have changed. You used to be able to withdraw up to 50% of the vested balance, and you would face a 10% early withdrawal fee. Well, now the government said, okay, well, with the CARES Act, you can take up to 100%. Now, if you are affected by the coronavirus, okay, you can now withdraw early from your retirement plan up to 100% without having to pay the 10% early withdrawal penalty. Now, that does not preclude you from having to pay income taxes, okay? I am not a CPA. I am not going to give you tax advice. What I am going to warn you to do is to talk to a CPA before you withdraw money from your retirement plan, because more than likely, you are going to face a big tax bill next year if you take money out. So just like the advice I gave you earlier on, if you can make your mortgage payment, make it. Don't borrow money using the SBA loans unless you need it. If you don't need to pull from your 401k or retirement plan early, don't, because you're going to have to pay some sort of taxes on it. And that could be 20, 30, 40%. I don't know. I'm not a CPA, so I'm not going to tell you what the number is, but just know that it could be a significant amount of money, and you're going to want to talk to a CPA before you pull the money out. Now, the other caveat to that too is 401k loans, IRAs don't allow loans, but 401k and some other retirement accounts do allow borrowing from your retirement account. The rules typically were up to 50% of the value of the 401k. Now that's been doubled to 100% if you're being affected by coronavirus, okay? Because the government wanted you to have access to the money that you've already put away for retirement in case you need it. And now you can get up to 100% of the vested balance as a loan. Granted, still got to pay it back. And if you don't pay it back, there could be consequences from a tax standpoint. So again, talk to a CPA, but just know that there's more access to your retirement money than before. Talk to a CPA before you take the money out so that you know what you're getting into before you do it. And hopefully that helps a lot of people. So anyways, I know I've shared a lot of information with you, and we hope that this message finds you safely sheltered at home with plenty of resources. And if for whatever reason, sorry, I get a little choked up over this, but if you do need help, please reach out to us. Those of us at E3 Realty and Loans absolutely care about every human being out there. We've got a lot of connections in a lot of different industries, and we're willing to help. In fact, we've got some things going on right now that we're helping numerous families out, and we're doing a lot of things to try to connect people with resources to fill the gaps. So if you need help, call us. We'll be there for you, okay? And stay safe out there. Look forward to more updates. And when we get through all this, really looking forward to celebrating with everybody. So I hope this finds you well. And anything you need, please reach out to us and we'll be there for you.